Jason Simpkins is hyping up three AI military stocks in his latest presentation, but won't reveal them unless you pay him thousands of dollars. The good news is he left enough clues in the presentation to figure out the stocks, and I reveal them here for free. If you appreciate me doing this, just drop a like and subscribe. There are multiple stocks to uncover here, so we're just going to jump right into it. This presentation is about how AI is going to revolutionize the military, with three companies recommended as a result. The first stock is described as an AI data company with ties to Israel and is currently being used in Ukraine. Beyond that, Simpkins leaves the following clues about this company. It's one of three companies on Earth that have IL-6 clearance with the United States government. It's the highest level of security classification for data and information systems within the Department of Defense. Additionally, he says, it was used to sort through 40 years of data for the SEC and expose Bernie Madoff's famous Ponzi scheme in just a couple of hours. Merck uses this firm's AI to speed up new drug discoveries. United Airlines uses it to plan more cost-effective flight routes. BP was able to save about $50 million in working capital within 2 weeks of onboarding its system. Police departments in New Orleans and New York have used it to successfully combat crime. The software helped locate Mexican drug cartel members who murdered an American customs agent. The company being pitched here is a well-known company, and that's Palantir, ticker PLTR. Palantir is a software company specializing in big data analytics and artificial intelligence. It provides platforms like Palantir Gotham and Palantir Foundry to help organizations analyze and interpret massive data sets for decision-making. Its clients include governments, intelligence agencies, and large corporations, using Palantir's tools for tasks ranging from national security and fraud detection to supply chain optimization and healthcare insights. I personally think Palantir is a hold at this time, and here's why. First is skyrocketing stock performance. Palantir's stock soared over 340% in 2024, making it one of the top performers in the S&P 500. Second is leader in AI. Palantir's AI-driven data analytics platforms have been pivotal in its success, with AI helping to improve customer results and contributing to a 360% increase in its stock. Third is major contract wins. The company recently secured a $619 million extension with the U.S. Army, highlighting its strong foothold in government contracts and ensuring a steady revenue stream. Fourth is S&P 500 inclusion. Joining the S&P 500 has elevated Palantir's market stature, attracting more institutional investors and enhancing stock liquidity. Fifth is valuation concerns. Despite its impressive growth, Palantir's high valuation has led some analysts to advise caution, suggesting that the stock may be overvalued at its current levels. This is the main reason why I believe this stock is a hold and not a buy. In summary, while Palantir's recent achievements are impressive, it's essential to weigh these factors carefully. Holding onto your shares could be a prudent move, but always stay informed and consider your investment strategy. I'm going to reveal the rest of the stocks in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out AlphaPicks. I reviewed over 100 stock picking services, and AlphaPicks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off AlphaPicks. So go ahead and click that link and take advantage of this amazing deal. Here's what Simpkins says about the second company. This firm's AI stops hypersonic missiles dead in their tracks. Now the Pentagon has gone all in, awarding this firm big contracts as part of an $11 billion effort to neutralize these new threats. It also has more than 40 ready-made and customizable AI applications that can optimize efficiency at power plants, detect fraud at banks, and predict equipment failures at some of the world's largest oil and gas companies. This technology is so good that Microsoft and Amazon Web Services are now offering it to all of their customers. So with 287 business customers and growing, this firm is now set to grab billions in profits from what the CEO believes is a $600 billion market. Now, this critical AI contractor with a market cap of less than $4 billion could jump as high 500%, if not more. This company is C3AI, and the ticker is AI. C3AI is an enterprise software company that provides artificial intelligence solutions for businesses to optimize operations, improve efficiency, and make data-driven decisions. Its platform enables organizations to build, deploy, and scale AI applications across industries such as energy, healthcare, manufacturing, and finance. C3AI specializes in predictive analytics, machine learning, and IoT integration, helping companies harness large data sets for actionable insights. This stock is another hold for me, and here's why. First, the AI hype train is slowing down. While C3 AI has benefited from the AI frenzy, we're seeing signs of cooling off. The stock's performance has been volatile, and the initial hype around AI might not sustain the same growth trajectory. It's a wait and see scenario. Second is revenue growth. Not as impressive as it sounds. C3 AI's revenue growth has been underwhelming for a company in such a dynamic sector. The shift to a usage-based model has introduced uncertainty into its revenue streams, and we need to see if this can truly scale in the long term. Third is profitability remains elusive. Despite promises of becoming cash flow positive, C3 AI continues to operate at a loss. The path to profitability is still unclear, with recent earnings calls indicating more investment in growth rather than immediate profit. Fourth is customer concentration risk. A significant portion of C3 AI's revenue is still tied to a few major clients, particularly Baker Hughes. This concentration risk could be a red flag if these partnerships don't diversify soon. Fifth is the valuation is high. C3 AI trades at a premium, with a price-to-sales ratio that's sky high compared to its actual revenue. Investors are paying for potential rather than current performance, which could backfire if growth doesn't materialize as expected. So there you have it, folks. C3 AI has some interesting tech and a spot in the AI market, but the current metrics and market dynamics suggest holding your positions until we see clearer signs of sustainable growth and profitability. Here's what Simpkins says about the last stock. In a historic first, this firm's AI-powered Top Gun has shaken the Pentagon to its core. Flying without a human pilot, it completely obliterated a top naval ace 5-0 in a head-to-head dogfight, coming away without a single scratch. That has set into motion one of the biggest transformations the US military has ever seen. Pilotless aircraft with superhuman reflexes that never tire and require zero training. Now hundreds of billions in new Pentagon contracts are about to send this tiny $14 defense stock flying. Because the technology developed by this small firm will revolutionize aviation forever, the same way jet engines did. But with an impact 100 times bigger. As this program progresses, I would be shocked if this company didn't show investors at least a 5 times return in the months that follow. The key is to get in now, before it sets off one of the biggest runs the market has ever seen. This company is Kratos Defense and the ticker is KTOS. Kratos Defense and Security Solutions is a technology company specializing in advanced defense, aerospace, and national security solutions. It focuses on developing and deploying unmanned systems, satellite communications, microwave electronics, and AI-powered drones. Kratos serves government agencies, the U.S. Department of Defense, and commercial clients, emphasizing rapid innovation, cost-effective solutions, and next-generation technologies to address modern security and defense challenges. I'm probably most interested in this stock out of all three and consider it a borderline buy. Here's why. First is the unmanned revolution. Kratos is at the forefront of the unmanned systems market, which is expected to grow significantly. Their focus on drones and autonomous tech positions them well for future military and commercial applications. Second is government contracts on the rise. With increasing defense budgets and a focus on modern warfare tech, Kratos has been securing new government contracts. This could lead to a steady revenue stream, especially with their backlog expanding. Third is innovation in hypersonics and satellites. Kratos is innovating in areas like hypersonic technology and satellite communications, sectors with high demand and potential for high margins. Their work here could open new revenue avenues. Fourth is analyst optimism. Analysts have been relatively positive, with some upgrading price targets and maintaining buy ratings, suggesting they see growth potential in Kratos' offerings. Fifth is valuation remains a bit stretched. While the growth potential is exciting, the current valuation leaves limited room for error, making it a borderline buy rather than an outright strong buy. And if you really want to make money with the stock market, make sure to click the link in the description to check out Alpha Picks from Seeking Alpha. I've reviewed hundreds of stock picking services, and this one performs the best. Since its inception 2 years ago, it's absolutely been crushing the market and has tripled the returns of the market in that time period. And if you click the link in the description, you get $50 off this service. So make sure to click that link now and start investing the smart way.